Okay, so let's see what has happened next. Okay, so we have an estimated allowance for doubtful accounts, okay? It's going to be based off of 5% of accounts receivable balance. Okay, so remember, if you guys remember from way back when we were dealing with chapter 10, right? We talked about this. It is standard for most companies to assume 5% of their accounts receivables will be considered uncollectible. Okay, that's just the 5% standard. All businesses, most corporations take 10 or 5%, but you know, that's actually a lot. Now, we can't assume that Katie and the corner bookstore and the great restaurant, we can't assume that they are going to be 100% loyal customers or, they're going to pay us. So this is going to be an estimated amount. This is what we predict that 5% of this amount is going to be uncollectible. So let's go ahead and proceed. All right. Here we have just exactly enough space to enter in our estimate. So let's go ahead and take a look at my ledger, because your ledger is going to tell you the exact account balance that you have right now. Okay, so I'm going to go to accounts receivable under my assets. So what is going to be my total that I have right now as of today? What's my account balance right now in my accounts receivable?
1531.95.
All right. So here we're assuming that 5% of this 1531.95 is going to be uncollectible. So let's go ahead and calculate it. What's 5% of the 1531? Anybody? What's 5% of this amount? $76.59. 76.60 if you round up. Good. Okay. So what are my accounts that I'm going to associate with dealing with the allowance for doubtful accounts? How do I make my adjustment entry to reflect this 5% uncollectible debt? Bad debt expense. Good. Excellent. Okay. So here, bad debt expense. And what is my credit account going to be? Okay. So what are my account numbers for my bad debt expense and my allowance for doubtful accounts? $65. Right? And then what's my allowance for doubtful accounts? Right? And then here we're just gonna make a little adjustment. I'm gonna write adjustment 5% 5% AR for uncollectible debt. Okay. There we are. Now we completely finished general journal number 22. So let's go ahead and enter in this stuff in our ledger. Okay. So first one's first is going to be the bad debt expense account. So let me find that real quick. Here's my bad debt expense. Bad debt expense. Okay. I'm also going to indicate here 5% of AR, right, for accounts receivable. Okay, general journal number 22, and it is for the 7660. Okay, and then we need to adjust our allowance for doubtful accounts. Here we are. So here's 630. Once again, I'm going to put adjustment 5% of AR. So this is where we have a credit balance. So when we do the next period, right? Let's say we do July's bad debt expense, right? This is the reason why we have a credit balance in the beginning, right? Because when we have this here, it's always going to stay here because of our accounts receivable. It's a contra account, right? This is supposed to reduce the amount that people owe you, right? So again, if we know that, let's say the 24-hour, or I'm sorry, when we go to the next period, right? Let's say Great Restaurant or Katie decides in July that they fault on one of their payments. Then we need to debit our allowance for doubtful accounts. But this is where, this is where it fluctuates between the debit and the credit. This one, because we're already writing 5% off as a bad debt, it's automatically going to give us a credit balance of 7660, right? But let's say if someone decides to fault on their payment, then we're going to debit the account to kind of match up or decrease, or in this case, we're going to increase what they owe us, right? But that's where the credit and the debit balances come from. All right. So here we have 7660 for my allowance for doubtful accounts. So let's go ahead and, okay, we already entered it into our ledger. Okay. Everyone good so far? Okay. Did I hit? Yes, I did. All right, let's go ahead and see what happened next. Okay. Here it says calculate 1 month depreciation on the truck. Okay, its mileage is going to be 150,000 miles before it needs to get maintenance. Okay, no salvage value. Okay, and usage life is 7 years. This right here month, we drove a total of 1,200 miles. Okay, so this is where our depreciation tables are going to come into play. So here I have this one, my depreciation table. First one we're going to look at is going to be our truck. Okay, so let me find the truck. I think it's the last. There you go, truck. Okay, truck. All right, we know from just looking at this, what depreciation method are we using? We got a few key factors, right? What was the information that we were given? Mileage, right? We were given mileage. Okay. All right. So what depreciation method am I going to use for this one?
Useful life.
We have a useful life. Okay.
For the term for it.
Okay, there's only 3 different methods that we learned, right? We got
Remember what it's called, but yeah, it's a fraction of, the total mileage before it would need maintenance.
Okay. So we have units of production, straight line, or double declining.
Units of production.
Units of production, that is correct. So here, I'm just going to indicate UOP, hope you guys, for units of production, just so then you know every time you depreciate your asset, you know exactly what method you're using. Okay? We're supposed to have 0 salvage value with the date that we place into service and a mileage of 150,000, right? And we are depreciating only 1 month, okay? Because we reached the end of June, so we are only calculating depreciation at the end of the month, which we were given. We drove a total of 1,200 miles, okay? Now, we're missing 2 components. We're missing the asset cost and when we actually place into service. So, where can we find this particular piece of information? Where? Ledger. Excellent. Good. So, if I go to my ledger and I go to assets and I scroll all the way down till I find my truck. Here it is, truck. I purchased it on July 8th. I'm sorry, June 8th. For how much? How much did 32,208.90. And if I bought it on June 8th, what's my assumption here? What's my assumption if I bought it on June 8th? What's my assumption here?
It went into service in June.
It went into service in June, correct, because obviously if I picked up the truck on June 8th, it depreciates the minute you drive off the parking lot. So here you go, June 8th. So that means we need to actually fully depreciate for the month of June. So here we are. Okay, so let's go ahead and do a little review here. What's my depreciation basis going to be based off of? What is my depreciation basis going to be? Pull up chapter 11 review if you need to.
$125.
125. Where did you get that number from?
I make mistake. I go mileage divide with 1,200. Yeah.
The cost of asset less base value.
That's not the correct one for the units of production. Actually, wait, no. You're correct. I'm sorry, I'm thinking about another one. So yes, it is going to be asset cost minus residual value or salvage value. In this case, do we have a salvage value? We
No
don't,
salvage value.
no salvage value. So that means it's going to be equal to your asset cost, which is the 32,208.90. Okay, I'm gonna, all right, good. So if we know that much information so far, right, that my depreciation basis is going to be my asset cost minus my salvage value, which in this case is going to be your asset cost, okay? So how do I find the per unit rate?
Depreciation basis divided by total estimated number of units.
Yes, which in this case is going to be, what's my estimated number of units produced?
1,200.
Okay, that's this year or this month.
So total would be, yeah, 150,000.
Yes. So in this case, we're doing in terms of mileage. Okay. So therefore, it should be what? It should be more than that. It should give you a total of all this. Okay. So every mile that you drive, it's gonna cost you 21 cents and 4726. Okay. So, with that being said, how do I solve for my depreciation expense? You're going to have to equal round this because you don't have a friendly number. What's my depreciation expense going to be?
Number of units.
Number of units. So here we take our 1,200 because that's how many we used or drove.
And then times rate.
Yes. And what do you get?
$257.67.
257.67. All right. Now, let's take a look at this depreciation expense. Okay. We have 7 years to pay this off. And if I pay $257, right, for 7 years. Okay, whatever. But anyway, so 257, okay? Why can't we not use that number? What's wrong with that number?
This is just for 1 month.
It is, okay, but for units of production, is it time sensitive? Do we care how long we use this asset for?
Yes.
No, we don't care. What do we care about?
How many miles it was driven in total?
Exactly. We only care about how many miles we drive. So in this case, there's nothing wrong with that number. That number is completely correct. You don't need to adjust anything because we don't care about time. We don't care about how long we have the asset for, right? Especially your truck, right? The truck should last you 10 years or more. But in this case, all we care about is how many miles we drive it for. Okay? So our capacity here is it can only drive up to 150,000 before you need to maintain, do maintenance and repairs to it, right? So in this case, do we need to make an adjustment here? No. We drove it for 1,200 miles in the month of June, so therefore $257.67 is exactly what we're going to depreciate it for. Okay. So again, if you'd like, you can solve for what your asset should be worth now. Okay, after the book value. So I'm going to do book value, right? So it's going to be your asset cost minus accumulated depreciation. So your book value now, it should be reflecting as 31,951.23. Okay, because you used already 1,200 miles. So if you were to sell the truck or return it back to the place, you should at least get something close to $30,000 because you didn't really use it that much. Okay, good. So here, this is what I want you to do for the journal. Since the entire section of the journals, right, as you can see for depreciation, we have to depreciate a lot of stuff. Okay, so with that, I want you to go ahead and compile all of them because they're all going to eventually go into one account, and that's going to be your depreciation expense account. Okay, and that should be depreciation. Okay, so they're all going to end up going to the depreciation expense anyways. The depreciation expense isn't particular, it's not broken down to particular items that you have. It's just one general category. So all of these items that we depreciate are all going to go to the same account. So we could just put the main account there and just list out all the depreciations that we calculated for every single asset. So in this case, if I recognize that I have a depreciation expense, then what is going to be my credit account? What is going to be my credit account? Use your chart of accounts if you need a hint.
Accumulated depreciation truck.
Yes, excellent. So I'm going to do accum for short, depreciation dash truck. Okay, now all of these are located directly under each asset account. So therefore, whatever the truck is, the account numbers, the accumulated depreciation for the truck should be right under it. So in this case, what are my account numbers for these? What's my depreciation expense?
660.
And my accumulated depreciation for the truck?
17011.
13011. Okay, and we know how much it's going to be for. It's going to be for the 257.
17011.
17?
Mm-hmm.
Okay. All right, and then let's see what my accumulated depreciation was for the month of June. So in this case, my journal should tell me that this is a credit. So remember, accumulated depreciation, it's a contra account to the actual asset account. So in this case, I am decreasing it because it lost value. So I'm going to credit this at 257.67. Okay. All right. So but I'll make a list of every single asset that we are going to calculate the depreciation for. Okay. So let's see what's next.
Coffee grinder.
So we're going to calculate 1 month of depreciation for both coffee brewers. Okay, so we're one before it. Okay. So here it says the first brewer has a life remaining of 3 years. Because remember, we bought it off from the other store, right? That means maybe that it's been used. We don't know. Okay? We just got an estimate that it still can last for 3 more years. no salvage value. Okay. And then the second brewer, right, we purchased it brand new from Hallie Rose. It's got a total useful life of 5 years with no salvage value. And here I give you use straight line. So let's go ahead and take a look at our depreciation table, and we're going to locate our brewers. Okay, so I think my brewers are going to be over here. All right, printer, register, brewer. Okay, so once again, I know for sure that we are doing straight line. Okay, and my brewer number 1, right, we were given that it has a useful life of 3 years, and we know that there's no salvage value. Okay, and then for coffee brewer number 2, we are using straight line, so SL for straight line. Same thing, useful life is 5 years, no salvage value. However, we need to determine the asset cost and when we placed it into service. So let's go ahead and take a look at our ledger. So we're going to scroll up to find our coffee brewers. It should be like pretty much right there. Here you go, coffee brewer. All right. When did we purchase our first coffee brewer?
June 4th,
June 4th. And how much did I purchase it for?
1900.
$1,900. So obviously, here's a rule of thumb. When you purchase an item, you should do the very first thing, which is to check if it works. So if you're going to plug it into a wall, you're automatically going to use it. So in this case, June 4th is when I purchased it. I plugged it into the wall to ensure that it works. Okay. What about my second coffee brewer? When did I purchase that, and how much did I purchase it for?
June 10th.
You purchased it on June 10th. All right. How much is it? How?
27.95.
Okay. All right. That's what we originally purchased it for. But we paid the vendor, and we got a 1% discount. So did we actually pay $26.27.95 for it? No. What did we pay? So you could do your quick math on the side here, right? If I originally purchased it for $26.27.95, but I received this $22.66 discount, what is my total amount that I should have?
26.05.29.
$26.05.29. So that's going to be here. 26.05.29 is what my original asset is for. And because, like I've mentioned before, we purchased it on June 10. You're gonna plug it into the wall to make sure it works. Because if you don't, then you would return it, right? So in this case, we never returned it. It works. So therefore, we placed it into service as of June 10. Okay? So that means we got to depreciate both of them for this month. Okay? So our only job is to just calculate for the month of June. So what is my depreciation basis going to be?
Asset cost.
Asset cost.
Minus salvage cost, which is 0 in this case.
Yes. So in this case, it should be 1,900. Yes. 19. Okay. What's my depreciation base going to be? I'm sorry. What is my depreciation rate? I said base rate. What's my rate going to be? What did you say?
That's a guess, 33.
Okay, how did you get 33? How'd you get that?
1 divided by useful life.
Correct. 1 divided by the useful life, which in fact is 0.333333. Okay. What's my depreciation expense?
1,900 times 8, 0.322.
So what did you get there? Okay, 633.33. Now, what is wrong with this number now?
That would be for what, the full year?
This is for the full year. Okay.
12.
And so we need to take this number and divide it by 12. So 633 divided by 12. In this case, if I edit my little thing here, I could just throw in divide by 12. So what should be my correct amount?
5278.
5278. Okay. You take the 63333 divided by the 12 months because 633. If I paid that 3 times, I would have been done with my whole entire payment, right? I would have reached my 1900. But in this case, I'm only depreciating it for 1 month. So in this case, I take the 63333 because that's for 1 whole year divided by my 12 and I get 5278. So once again, that should be there. This minus this should give you 1847.22. Okay. It's unnecessary really to have to do the accumulated with the book value unless you plan to do for the next month. But in this case, I just need you to get to the depreciation expense, and that's good enough for this case because we're only calculating just for the month of June. Okay, there you go. So then now we got to do the same thing for my second coffee brewer. So in this case, month of June, okay, what's my depreciation basis going to be?
26.29.
Yep, 2605.29. What's my depreciation rate this time?
0.2.
0.2. Good. So what's my depreciation expense going to be for the month of June? So since we recognize that we have to divide everything by 12, that's exactly what I'm going to do. So I'm going to equal round this. All right, we're going to multiply the depreciation basis times the rate divided by 12. So what is my depreciation going to be for the month of June?
43.42.
43.42. Once again, if you need to have that there you go. So I have 43.42 plus my 52.78. So I'm going to go ahead and place it here. So I'm going to add this together. I should get a grand total of 96.20 for the depreciation of my coffee brewers. Okay, so back to my journal here. What's my account going to be? 15011. Okay, and it's going to be for the 9620. All right, for both coffee brewer number 1 and coffee brewer number 2. Okay. So then, what is next? So what's next? I have to do the depreciation. I have to calculate 1 month's depreciation for the coffee grinder. Same thing, 5 years. Straight line and no salvage value. So back to my depreciation table here. Okay, I keep clicking the wrong one. So depreciation table here, I'm going to go ahead and go to coffee grinder. So we know method that we're going to use is straight line, right? Useful life is 5 years. And this is also salvage value of 0. Okay, so now let's go ahead and go to our ledger to find out how much my coffee grinder was and when did I purchase it. So here, my coffee grinder. All right. When did I place it into service?
June 15.
June 15, right? Because just because we bought the coffee grinder and we plugged it into the wall, it has to be when you place it into service, right? What were the 2 things that we had to have in order for the coffee grinder to be complete? Right?
Foundation and an electrical upgrade.
Yes, we had to do an electrical upgrade, like or install another electrical unit nearby, and we also had to have a foundation for the coffee grinder to be to place it on top of. Okay, so because of all that, it was only completely done on June 15th, which then we were able to place it into service. All right. Now, how much was this coffee grinder?
415807.
4158 oh 41. Oh, okay, I see. Now that's what it originally cost us, but we also got the 1% discount. Remember?
Right. 414557.
Yes, 41 for so because we got a discount off of it, we actually only paid X amount of dollars for the coffee grinder itself. So 41, 45, 57. 41, 45, 57. Okay, and the date that we placed into service was the 15th. Now, what's our assumption here? Yes, we depreciate or no? Do you guys remember the rule? What's the rule? Do we depreciate this month or do we depreciate it the next month?
It's this month.
This month. Correct. Because it fell between.
I wasn't sure if it was, the 15th. I knew the 15th was a cutoff. I wasn't sure if you included if it's 15th or you don't. So.
Okay.
I
So
looked it up real quick.
good. Excellent. So if it's within the first 15 days, including the 15th, yes, you depreciate this month. If it's the day after the 15th day, so 16 all the way to the 30th or the 31st of the day, you depreciate it the next month. So in this case, we got it on the exact end of the cutoff. So therefore, we need to depreciate for the month of June. Okay. All right, so again, this is a straight line, so the depreciation basis is going to be
57.
okay, good. And the depreciation rate's going to be 0.2. And we need to calculate our monthly. So we're going to take my depreciation basis times the rate divided by 12. So what should be my depreciation expense for the month of June? $69.09 is correct. All right, there we are. Okay, so 69.09. So now I'm going to go ahead and journalize that real quick right now. So here we are. A cube depreciation grinder, which should be 15021.
15021.
There you go. 21. All right, for the grand total of the 6909. Okay. Good. Let me see. We should have a fair amount of good time right now to go over the next one. So let's see what the next one says. All right, the next one says we're going to calculate 1 month depreciation on the computer, the printer, and the cash register for 5 years, okay? Double declining, no salvage value. Okay, so we'll do one at a time, and then we'll go through each one. So we gotta do the computer, printer, and cash register for 5 years, double declining, no salvage value. So let's pull up our table here, and let's locate our right here. So my computer. Okay, once again, my method is double declining. Okay. Useful life is 5 years with a no salvage value. So let's go ahead and find out how much my computer was worth in the first place. All right, so here we are, register. Here we are. My computer. When did I buy it and how much did it cost me?
June 5th.
1834.84. 1834.84. And once again, I have to plug into the wall, so I automatically place into service. So, once again, this is double declining. So how do we calculate double declining? So what's my depreciation basis going to be? Yes, because it's going to be your beginning of the year's book value. Salvage value has no effect in here until you reach the very end. Okay? All we care about is the beginning of the year's book value. So, for this particular one, when if you do continue on, and let's say you do have to do the depreciation for July, you must use the book value, not the asset cost. Okay, that's how double declining works. Okay, so what's the depreciation rate going to be this time? 0.4, right? Because we're going to take 1 divided by the estimated useful life, which is 5. Oh, which is 5 years, and we're going to times it by 2. Because we're going to depreciate it twice as much, right? So therefore, it was 20%, now it's up to 40%. Okay? So then, same thing here. What is going to be my depreciation expense? What is going to be my depreciation expense? 6116. Okay, right? Because we also have to take the consider into the fact. Yes, correct. So there it is. That's the for the year, and then we're gonna divide the whole thing divided by 12 to get you the month, which is the 6116. So once again, if you do solve for this, and let's say you do calculate next month's depreciation, you're going to be using the depreciation, which is, the book value of the 1773. Yeah, you're going to use that as your depreciation basis for the month of July. So here we have 6116. Okay, so I am going to go ahead and journalize this. Okay, so here we are. Accumulated depreciation. Okay, for the computer, which should be account number 140 11. Okay, and it's for the 6116. Okay, all right. Next, we're gonna go to is my printer. Same thing here. We have double declining. So DD, all right. We are given that it has a useful life of 5 years with a salvage value of 0. So let's go ahead and see when we actually bought the printer. Okay, so we bought the printer same day as the computer, right? We went to the store and just purchased all of it. So here the printer is going to be on June 5th. But how much did my printer cost me? 37887. So 37887. Okay. So once again, we're doing the month of June. Okay. The depreciation basis is going to be your beginning of the year book value, which in this case is my asset cost. My depreciation basis is 1 divided by 12 times 2. I'm sorry, 1 divided by 5 times 2, right? Because you're going to depreciate twice as much. Okay? So what is going to be your depreciation expense for the month of June?
$12.63.
1263. Once again, 1263. Okay. Good. 1263. So I'm going to journalize this real quick. Once again, we have another accumulated depreciation for the printer. Okay, that should also be 14021 for the amount of $12.63. Okay. Last but not least, we also have to do the cash register. So the cash register here, okay, we're given that the depreciation method is going to be, once again, double declining. Okay. We're given that it's 5 years useful life with a 0 salvage value. So let's go ahead and see how much is my cash register worth. Okay. Let's see. Here we are, cash register. We bought it a day later. Okay. And how much was my cash register? 64949. So 64949. And we bought it on June 6th. Okay. Once again, we're depreciating for the month of June. Okay. Depreciation basis is going to be this right here. The rate is 1 divided by useful life times 2. So what is going to be my depreciation expense for the month of June? $21.65. Okay, $21.65. So once again, I'm going to journalize this. Acct depreciation register. That should be 14051. Okay. For the total amount of $21.65. Okay. Okay. Let's see. Okay. I'm going to stop here just because the furniture, we have like 4 different furnitures to go through. So, let me see. Should we have enough time? That way we can close out our depreciation and then just continue tomorrow with the amortization. Okay, yeah, let's go ahead and complete the other 4. So we have here, we're going to calculate 1 month's depreciation for furniture. 7 years, straight line, no residual value. So in this case, I'm making it super easy. So it's furniture, pretty straightforward. So let's go ahead and go to our depreciation table once again. Okay. So the furniture should be all the way to the left. Actually, it's all the way to the right. Here you go. My first one is my tables. Okay. We're given straight line. with 7 years useful life and 0 salvage value. So let's go ahead and see what my tables were worth. So scroll all the way up. So table, here we are. The bistro tables and chairs. Okay, when did I buy it and how much did I buy it for?
June 8th.
June 8th, and I bought it for?
660508.
So here my asset cost is 660508 with June 8th. Okay, so therefore we're going to depreciate for the month of June. What's my depreciation basis this time?
6650.
Yes. It's going to be your asset cost minus salvage, which is in this case salvage is 0. So it is 660508. What is going to be my depreciation rate this time? Yes, remember, because this we're dividing it 1 out of 7 years. So in this case, it's going to be the 14,285,71, yada yada yada. So in this case, I am obligated to have to use my equal round. Okay? And I need to solve for just 1 month. So what is going to be my depreciation for the month of June? Anybody? What is the depreciation expense for the month of June? $78.60. Okay, you run it up too high. So it should be $78.63. Okay, so $78.63. I'm going to journalize this real quick. Right? We have a cum depreciation tables. That should be 13,011. Okay. For the grand total amount of $78.63. Okay. All right, next we have is the counter, right? We're given that this should be straight line. Okay, 7 years useful life with 0 for salvage value. And once again, when did I purchase my counter? June 7th for $1193.22. So let's go ahead and solve for the depreciation for the month of June. My depreciation basis. Okay. My depreciation rate. So what is going to be my depreciation expense for the month of June? $14.21. Yes. $14.21. So once again, I'm gonna journalize that real quick. Okay. Cum depreciation for the counter. All right, that should be 13,021 for the amount of $14.21. Okay. Then we're gonna do the desk set. So the desk, once again, we have straight line, 7 years useful life, $0 for salvage value. Okay. All right, here we are, desk set. When did we purchase this and how much did we purchase it for?
65837.
Yes, 65837. 65837. And we purchased it on June 7. 65837. Okay. Once again, depreciation basis is going to be asset minus salvage. Your rate should be 1/7. So what is going to be your depreciation expense for the month of June? $7.84. Good. All right, $7.84 for the desk set. So once again, a cube depreciation desk for the 13031 for the $7.84. Okay. Last but not least, we need to do our shelves. So we're given that it is straight line with 7 years of useful life with no salvage value. So when did we buy these display shelves?
June 7th.
June 7th for 57708. Okay. June depreciation basis is going to be the 577 minus salvage with 1/7. So what's the depreciation expense for the month of June? $6.87. And here we are, $6.87. Okay, that should be for 13041 for $6.87. Okay, so there we are. We have all of those depreciation tables. We're completely done with every single one. Okay, so we did every single one of them from the computer all the way down to the display shelves and the truck. Okay, so that means let's tally up our total here so we know how much depreciation expense we are dealing with. So if you'd like, go ahead and do that equals sum. All right, and what's my grand total of depreciation? 625.95. Okay. Good. And then here, I'm just going to go ahead and write depreciation adjustment for all fixed assets. Okay. And of course, last thing that we got to do is we got to plug in all of these numbers into each and every single account on our ledger. So I'm going to go ahead and jump straight to the depreciation expense account first, so then we can go ahead and tally everything up afterwards. So first things first, here we are, depreciation expense. Okay. We can say for truck, furniture, office equipment, and actual equipment. Okay. General Journal 23, since we started on a new one. And it's for the grand total of the 625.95. Okay. All right, now we're going to go back to my assets, and I'm just going to go ahead and go down the line. So I'm going to start up from the furniture. So bistro tables. How much was my accumulated depreciation for my tables? Okay. What is my accumulated depreciation for my counter?
1471.
All right. What about my depreciation for my desk set?
787.
$7.84. Okay. What about my accumulated depreciation for my shelves?
87.
687. Good. Okay. Now we're going to go down backwards. So what is my accumulated depreciation for my computer?
160.
For computer. 6116. Good. Okay. What about my printer?
1262.
1262?
63.
63. Okay. And then what about my cash register?
2165.
9165?
2165.
2165. Okay. And then what about my coffee brewers?
9620.
Oh, 23 for 9620. Okay. My coffee grinder,
6909.
6909. And then lastly, how much for my truck?
25767.
25767. Okay. All right. So that's the depreciation expense. Now, when we actually calculate our, main account, we're going to actually reflect it at its book value. Okay. So there we are. That's depreciation expense for you. Okay. So tomorrow when we come back to class, we're going to finish up the rest of this. So we're going to spend the first half of the class going through the amortization and doing the recording of the salaries and wages expenses, as well as another other stuff. So after that, okay, then we're going to dive right into creating our adjusted trial balance. Okay. So again, it is now 11:30. So if you guys don't have any other extra questions, you may go. And I'll see you guys tomorrow.